So over here, we have another move down. We've got a sell condition right here. Okay, but this is invalid because everything's pointing up. Now, we get the sell condition, price moves down, and we can draw a trend line here. Okay, and at the point of this break, the medium-term moving averages come back in order. When it breaks the trend line and pops above, that's when we get our our medium-term moving averages coming back into buy. Okay, but we don't have a blue arrow yet. Okay, that would be an extremely aggressive entry. What we can do is we need to wait for a blue arrow to appear for our trigger. Now it appears on a little doji here, and that would have had me a little worried. So what we can do is we can do the same thing that we did back here. We can draw a point of support, or resistance rather, sorry, right across these tops and wait for break. Okay, and we get it right here. This would have been a decent entry. This would have been okay. I mean, we got everything was in order. We got our trigger. Everything looked good. Okay, except for this little candle, and we need to pay attention to that stuff. So we can draw a resistance level up here, and when price breaks, it breaks it right here on this candle. Okay, that would have been another good entry. So we'd place our entry here. Our stop could go right down below these moving averages. So what price does is it comes up, pulls back a little bit, creating a tiny little swing point, and then moves away. Now this gap was a Friday move, or this was a Friday, the open of a weekend. It was a new week here. Okay, so we would have ended up probably holding this position over the weekend, but it's a 4-hour chart, and so that's when you have a nice entry like this and everything's in order, it's a real good indication that's going to carry through over the weekend. And if it doesn't, what we'll end up doing, we'd have gotten in here, our stop would have been down here, and by the time price got up here, we would have been at break even. Okay, we would have moved our stop to break even. Okay, and subsequently price gapped up, and we had a nice if we didn't get taken out here for our target, price would have come back and then taken us out somewhere over in here, okay, for another 2-to-1 trade. So that's how we do it. And I'm going to get to some live charts here. I'm going to get to some live charts here. I'm going to show you some more ins and outs of how to do this. Okay, this is just the basic stuff here. As far as trading opportunities on the 4-hour chart, it really depends on how the moving averages line up. You guys can load this stuff up on your charts and take a look. If you press, I'll show you when I pull up my charts. If you press, I think Control Y, it'll bring up the period separators, and it'll show you the weeks, the number of bars inside a week. So it'll put those separators up on your charts, so you can see kind of what the signals are and how often they trigger and stuff. So let's get on to the next slide. Now for sell trades, we need the 100 EMA, the blue one, to cross below the 100 SMA, which is red. Okay, so now we're in sell. The 100 period SMA is red, and it's above the blue one, so we're in sell on the longer term. Okay, when the 13 period EMA crosses below the 21 period EMA, the medium term trend is down. Okay, so now we've got a downtrend long term, a downtrend medium term. So now we need to look for sell trades. And what we're going to do is we're going to look for red arrows, which means the 5 EMA crossed under the 6 EMA. And when we get that, then we're going to enter the market. So here are the rules. The long-term trend needs to go into sell, the 100 EMA below the 100 SMA, or the blue below the red above the blue. Okay. The medium term needs to go into sell, the 13 period SMA needs to be below the 21, or the green below the purple or magenta colored moving average. Okay, so the magenta is above the blue, or above the green. Okay, then we're going to be looking for the 5-6 to cross over, giving us a sell point, or a sell entry point. Okay, we're going to have a red arrow there. Now we need to wait for all these conditions to be met before placing a trade. So here's some examples. Now this is an interesting scenario. Okay, we've got the longer term moving averages and sell here. Okay, we've got the red above the blue. Okay, price moves up and it pulls back into these moving averages and then fires off downwards. Okay, this is a big candle, and that would have been rather scary to get in on. Okay, our stop would have had to go either here or here. That's just that's a big stop loss. Okay, that's something that we want to stay away from. And on top of that, the medium-term moving averages were still in buy. Okay, the green was above the purple or the magenta, so we need to wait. Now, subsequently, when we have a big candle like this, okay, when we see something like this, it's an indication that the move is kind of over. Okay, it can signal some really big moves. Okay, like this one did. Okay, this one fired off into a really nice move. Okay, and this candle was about as big as this, but nothing was lined. The short term and the long term were lined up, but the medium term didn't agree. Okay, so what we need to do is we can draw a trend line from this point back here across these bottoms and wait for a break. Okay, that's going to confirm that we're in a downtrend. Okay, and when that candle breaks, our medium term goes into sell. We've got the long term in sell, and we've got a red arrow up here. Okay, now this is a point of entry. Now this was a big candle, so our stop loss would have had to go up here, and that would have been a little scary. Okay, but this is plenty of confirmation. When we get trend line breaks and everything lines up right on the same candle, this is going to scream at us to go. Okay, and we want to take advantage of this. So as you can see, we would have placed our entry here. Our stop would have gone probably above the red SMA or the red the red SMA. Okay, the 100 period SMA. But as you can see, this trade worked out very nicely, and we definitely got a 2-to-1. And we actually got another entry right in here. And this was a shorter candle, so this would have been a little bit more comfortable. And what happens is price pulls back, everything's still in order, we draw our trend line, and we get a break, and the 5 and the 6 crossover, so we get in here, stop loss goes up here, and bam, we get another nice 2-to-1 trade out of that. Oh, sorry about that. Yes, this is another good comment. You don't have to enter if the stop loss is too high. We can wait for a re-entry with a better risk-reward ratio. This is just a good example of how when a trend is intact, and this is a solid trend that's intact. We've had everything that we're looking for. Okay, and this is just a solid entry. In fact, this is actually a head and shoulders pattern. We've got the left shoulder over here. We've got the head and the right shoulder. Okay, and that's an excellent indication that the market is going to continue its downtrend. Okay, we're already thinking we're already thinking that the market is in a downtrend. And when we see this show up, okay, and we draw our trend line, this is actually a neckline. Okay, when that breaks, we are golden. Okay, we know that the trend is going to keep going, so we need to hop on that. Isaac, you know what? This is a good question. When I first started trading, well, let me read your question here. It says, "You make it look so easy, Josh, but is it?" I heard this when I first started trading, and I didn't quite understand it. And now I do. Okay, I heard somebody say that trading when you first start out is tough. You don't get it, you can't figure it out, but once you do, once you understand what's going on, it then becomes it's not necessarily easy, but you can spot what you know what to look for, and when you see it, you jump on it. And at that point, your profitability skyrockets. Okay, when you wait and you understand what you're looking for, it's awesome. And it's tough. It is hard work. But once you put in the work and once you understand what you're doing and how to do it, and that's what I'm showing you guys. Okay, this is just one example, and we're going to get to some live charts. We're going to get to some live charts here in a second. So I'll show you exactly what's going on in the market. There's actually an interesting scenario setting up right now on one of the pairs that I want to show you guys. So we're going to take a look at that. Ben, this is another good question. When I'm trend trading, I definitely try and hit a 2-to-1 target. That's just, I like targets. I like a fixed take profit. I like knowing that if the trade goes in my direction and hits my take profit, that I've made twice as much as I'm risking, and in the process, I get to move my stop loss to break even. Okay, and that's what I want. I want to get to break even. First and foremost, I want to get to break even so I'm in a free trade. That means that if the market goes against me and stops me out, I've lost nothing, and that's the name of the game. I mentioned this either in the last webinar or in a previous webinar, that hedge fund traders, when they sit down to trade, their primary #1 goal is to not lose money. Okay, I think Warren Buffett said rule #1 when you're trading is never lose money. Rule #2, never lose money. Rule #3, never forget rules #1 and 2. Okay, never lose money. Don't lose money. Now you're going to have you're going to have stinker trades that go against you and take you out. That's part of the game. Okay, I promise you, Warren Buffett made a few stinker trades in his lifetime. But the primary goal is to make sure that you don't lose money. If you can move your stop to break even and get into a free trade and let that thing run, then you do it. Okay, you move to break even. David, yeah, I mentioned this a little earlier. Is there any way to set up the arrow signals? There is. It's a EMA crossover indicator, and you can do a Google search for that if you don't want to wait. But what I'll do is after the webinar, I will I'll post this. Okay, I'll post a place where you guys can download it, so you'll be able to have this. John, this is another good comment. They say that a trending market only happens 20% of the time. It depends on what time frame you're looking at. You can get really nice trends on a 15-minute chart all week long. The quote-unquote trend will change directions a number of different times during the week as the market pulls up, or as the market moves up and then pulls back. Those tiny little pullbacks are trends on a smaller time frame. Okay, and I'm going to show you that. This is going to be so cool when you guys see it. And I'm going to show you guys a trick that you guys are just absolutely going to love, and y'all are going to run out and get this EMA crossover indicator. Okay, it's just awesome. I love it. I love being able to use that indicator, and I'm going to show you something really, really cool. Can I explain the exit once we get into profit? Yeah, I'm going to show you that. But basically, you know, when you get an entry, like this would have been a great entry right here, okay? We get trend line break, everything's in order. We're all in sell on all accounts. So we get in the market, stop loss goes above the high, and the market moves down. As soon as we get into, you know, say this stop loss, this is a euro pound, so a stop loss may have been like 30 or 40 pips on the 4-hour chart. So once we get, like, say it was 30 pips, once we get 30 pips into profit, we move that thing to break even immediately. Okay, that is step one. Okay, step two is as the market moves down, it'll create these other little swing points along the way. Okay, so if the market moves down, pulls back, and then creates a lower swing point than where your break even is, you can move it down just above that swing point and trail your stop. Like right here wouldn't have been, this would have been right at your entry right in here, so we'd have left that. We would have been at break even probably by this point, probably somewhere down in here. So our stop loss would have been to break even here, and it came down, pulled back again, and then swung down and created another swing point. So every time it creates these swing points, you move your stop down above the swing points, and that will lock in profit along the way. So you know, and this one definitely hit a 2-to-1 target somewhere down in this area right in here. So that's good stuff. No, the 5 and the 6 lines, those EMAs are not actually on the chart. That's what these red and blue arrows represent. Every time the arrows pop up, you get a 5-period moving below a 6-period moving average for a red arrow, and then a 5-period moving above the 6-period for a blue arrow. So that's what it keeps my charts less cluttered, and I like seeing arrows. I like seeing I like things to say, hey, guess what? Here you go. It pops up, and there's something new on the chart, and I can see it. So that's what I like about it. You know what, Brian? This is a good question. How does it work during congestion or consolidation periods of times? I'm going to show you guys that. I'm going to show you how to deal with that. Okay. You know, and I'm going to get to my charts here in a second. Awesome, TJ. Yeah, this is an interesting comment. It says, "Nice to see this, Josh. Been trying to crack this code for 13 years. They say the trend is your friend. This logical methodology proves that. Like what I see. Awesome. And you guys are really going to like what I show you when I get to my charts. So stick around for that." Yeah, this is another good comment. The hard part is not following the rules. If I can keep trading according to the rules, then it becomes easy. That is absolutely right. You guys have to understand this. When I first started trading, okay, I thought I had to be in a trade all the time. Okay, and if if I got any type of signal at all, no matter what I was looking at, if I got any type of signal, I jumped in on it. And even like if I thought there was going to be a signal, okay, if it looked good for an initial setup, I'd jump in on that thing. And man, I got burned so many stinking times, it's not funny. And I think a lot of people get burned. Okay, and it's being patient. It's saying, you know what, I'm tired of getting burned. I'm tired of getting screwed around. I'm tired of getting yanked around, and I'm tired of losing all the time. And we have to come to that point. We have to kind of come to a crisis point in our trading. We have to get to a crisis point where we can't stand losing anymore, and we can't stand not making it, and it has to break us. Okay. I think I mentioned this before when you go to boot camp. They break you, and they will break you by any means necessary, and it's not to hurt you. Okay, they break you for a reason, for a higher purpose. Okay, they break you so that they can build you back up. Okay, and we break ourselves as traders all the time. Okay, if we got a system and we know it works. I mean, most of the time we can pull up a system that we like, that we get, there's something inside of us that looks at it and says, yeah, I get this, I like this. And then when it comes to trading, we can't do it. And oftentimes we find that we're breaking the rules. We get too excited when we see a potential setup, or we get too excited when we see an actual trigger. Everything lines up, we get a trigger, and we get too excited about it. That kind of thing is going to burn us so many times, and a lot of people have been burned. Just reading through a lot of the comments here, a lot of you guys have been burned already. Somebody's been trying for 2 years, somebody's been trying for 13 years. That's tough, but you believe in it, and that's why you keep doing it. So let's get you guys. I want to get you guys past that hump. Whatever wall that you guys are coming in contact with, I want to get you guys past that. And this is an awesome system to do it. This is another good question. How do I determine the stop loss when we have an entry condition met, like right here? Our stop loss goes above the previous swing high for for a sell trade and below the previous swing low for a buy trade. Can we get this MT4 template? I will see what I can do about that. This is part one. Okay, there's more to this system coming next week. So maybe after next week I can put this up online for you guys to download the whole thing and have it on your charts and have a good, something solid that you guys can use, and something that you understand. And that's the name of the game. If we can understand it, we get it, and we're excited about it. Then we're gonna make way more money being excited about something that we've got than something that comes along and we're not so sure about it. We have some questions, we have some reservations. We got to believe in what we're using, and that's a big part of it too. All right, I am going to get moving on here, and this answers the question I was just reading. Stop loss. We're going to start a stop loss below the previous swing low for buy trades, or over the last swing high for sell trades. Okay, and our take profit is going to be twice as much as our stop loss. That means that once our stop, well, let me read this here first. This explains it. We're going to move our stop loss to break even after we get in profit by as much as what we're risking. For example, if our stop loss is 50, then we're going to move to break even after 50 pips. Okay, and we're going to target 100. And if we can move our stop loss over a swing high and lock in some profits in case the market turns around and goes against us, then we're going to do it. So that if we get exited out of the trade, then we've gotten stopped out with a profit. So that's, our number one goal is to not lose money. Our number two goal is to make money. Okay, and as long as number one is not to lose money and number two is to make money, as long as making money is secondary to not losing money, then that's key, guys. That's very key. Now, this is something that is very, very important. Okay, and I mentioned this last week. I need to know what you guys think about my presentation, and I want to give you guys a copy of Forex Profit Model. Okay, and I'm going to pick the best comments. I need a bunch of comments, and I need to go through, and I need to see that. I need some feedback here. I love your comments when we get in here into the webinars. I love the feedback. I love to hear you guys making comments and asking questions. And if you've got a question that about this webinar that you want to ask me, ask me. If I don't get to it here, post your question on this website. It's going to be forexprofitmodel.com forexprofitmodel.com/profitmodel.html. You need to go to that website. If I don't get to your question here, I need you to go ask it on that site. Okay, I need some feedback here. And now I'm going to get to some charts, and I'll come back to this slide when we're done. So. All right, this is a live chart. Okay, this is the Aussie dollar 4-hour chart. Okay, and we've had some big moves up in here. We're in a very nice trend right here. Okay, now does everybody understand why this is a good trend? Why this trend is intact, and we should be looking for why we should be looking for buy trades?